Hey folks, just wanted to tell you something real quick. I did a little report this morning, and I wanted to talk about taxes and cryptocurrencies. Up to this point, there's been a lot of questions on how the IRS would take care of taxing you as far as your cryptocurrencies are concerned. So I wanted to kind of give you my opinion based on my expertise in real estate investing. So while I am no tax accountant, you probably still will need to consult um, your accountant for verification of whatever I tell you. So based on my experience, I've been investing in real estate for 14 years, and there are two kinds of income that you need to be worried about. There's ordinary income, and then there's the short-term or long-term capital gains. So capital gains and ordinary income. So ordinary income is income that is derived from the day-to-day functions of doing business, like the money that you earn from your employer would be ordinary income. Or if you own a business and let's say you buy a widget for $5 and you sell it for $100, then the $95 that you just gained, that'd be ordinary income. Or the $100 you gained is ordinary income, and the $5 is your expense. So your profit would be $95. So the way that works is ordinary income is taxed just as if it's a wage that you earned at McDonald's or Walmart or wherever, Apple, who knows. So how does this relate with cryptocurrencies? Well, if you are mining cryptocurrencies, there is an inherent cost in buying your rig or buying the cloud mining contract. So that would be your first business expense. So if you're buying a contract or you're buying the machinery, then you would mark that down as a business expense. Then every day when you get paid, or every coin that you get paid, that would mark ordinary income. That would be income as a business profit or business revenue, better yet. So what you need to do is at the end of the year, you need to compare your expenses with your income. The way that I mark it is anytime I have a coin added to my account, I check to see what the dollar equivalent it is that day, and I mark it down in a ledger so that I know that on this day I got $30 worth of Bitcoin, or on this day I got $25 worth of Bitcoin. That's important because that leaves you a base. That income tells me that I'm going to be taxed somewhere between 0 and 40%. Although now with the new taxes with Trump and the House and the Senate voting in, it's going to be close, and 39% would be at the top rate. So that's dropped 1%. For the rest of the tax brackets in the middle, you're going to see basically a 3% tax cut from this new bill that went through. So if you were at 30% before, now you're at 27%. Fine, it's ordinary income. Here's the other side of that. What if you don't cash out your coins immediately? What if you hold on to them? Well, that's when short-term gains and capital gains, that's when capital gains come into play, whether it's short-term or long-term. Now, long-term capital gains means that you've held the coin for over 1 year, for 1 year or more. So if you buy Bitcoin, let's say you bought Bitcoin last year, January the 1st, and it was about that time, it was about $600. And today it tanked. It's tanking right now, so it's about 13,000. But at the top, it was 19,000. So let's say that you bought it for 1,000, and you held on to it for 1 full year, and you sold it at let's say 21,000 to make numbers easy. So January 1st, you bought it last year or this year. As January the 1st approaches, which is in a week and a couple days. You sell it at 21, so you gained $20,000. Your long-term capital gains is about half of your ordinary income rate. So, but typically they have three. That's either 0%, 15%, or 20%. That's pretty much how they mark long-term capital gains. So if you held on to your coin for a year or more and then sold it, you'd have to pay on the difference between when you bought it and when you sold it. Why? Because the government sees it as a commodity, not as a currency. And even if it was a currency, it's probably pretty close to the same thing. Short-term capital gains is 364 days or less, so less than a year. So if you bought your cryptocurrency on, let's say you bought Bitcoin in August when it was $3,500, and you sold it at the beginning of December when it was $1,300, or you sold it right now because it's about $1,300 right now, then you made $10,000. Well, that's going to be charged as short-term capital gains, and in that case, it's going to be basically your income tax bracket. So if you're in the 30% tax bracket, you're going to pay 30% of that in taxes, so $3,000 of that in taxes. So while that does suck, that would probably be the appropriate way to do it. So I hope this explains it. If you're holding on to it and you're not selling it, your long-term capital gains, you're holding it as an asset. If you're constantly earning, then it's going to be ordinary income. And that should help you in doing logging and keeping track of your cryptocurrencies, so that when it comes time for the tax man to see it, eventually they'll figure out how much you made. So it's better just be on the up and up and go ahead and pay it every year. All right. Hope you guys learned something from this. If you have any questions, feel free to ask down below. As you can probably tell on my channel, I've got plenty of stuff that I can share with you about cryptocurrencies, and I will even leave a link down below for you to be able to figure out how to mine cryptocurrencies or mine Bitcoin. This is an exciting time, in my opinion, to get in. So good luck.